Straight to business in the meantime, though. US President's latest remarks on the war in Iran. What a surprise. Driving the price of oil up, Sean.
Donald Trump warning the fragile ceasefire between Washington and Tehran was on, quote, massive life support after saying Iran had sent back an unacceptable response to a U.S. proposal to end the conflict. The barrel of Brent trading around the $106 a barrel mark, while the West Texas Intermediate is just over $100 a barrel. Before the war started, barrel Brent was actually hovering over the $70 a barrel mark.
Still room for that price to grow?
Yes, and that's what the CEO of Saudi Aramco pointed at when he spoke on a conference call with analysts. The head of the world's most valuable oil-producing company explained that global markets were losing 100 million barrels every week the Hormuz Strait is closed, and that most of the world's spare capacity in oil production is located in the Persian Gulf. So unable to serve the market at this time. He added that, quote, the longer the supply disruptions continue, even for another few more weeks, it's going to take much longer for oil markets to rebalance and stabilize. It could drag on into 2027 to return to normal levels. And finally, he also pointed to a disconnect between the price at which oil is trading in futures market, which is the benchmark prices we saw at the top of this bulletin, and the actual physical barrels on the ground, meaning that companies and governments are using up their reserve stockpiles, which is keeping crude prices from going even higher. But those stockpiles are running dangerously low.
Now, in the US, political leaders, they're scrambling to relieve drivers' pain at the pump.
Rising fuel prices due to the war in Iran are becoming a real headache for Republicans in particular, who are looking to this fall's coming midterm congressional elections with mounting alarm. President Donald Trump saying he's planning to reduce or suspend federal fuel taxes. Analysts, though, say such a move is unlikely to have a significant effect on Americans' wallets, but could have lasting consequences for the country's transportation infrastructure. Brian Quinn has the details.
With midterm elections quickly approaching and prices at the pump soaring, American drivers are looking for relief, and the Trump administration is looking for a quick fix. On Monday, the president said he'll be seeking to reduce or suspend the U.S. federal gasoline tax.
How long are you going to suspend that tax for, then?
Till it's appropriate, yeah.
Mr. President,
it's a small percentage, but it's still money.
The federal gas tax is the largest source of revenue for America's interstate highway system. At just over 18 cents per gallon of gasoline and 24 cents per gallon of diesel, it brings in more than $23 billion per year to pay for repairs and improvements. Gasoline is now averaging more than $4.50 a gallon, 50% higher than before the U.S. and Israel launched their war on Iran. Analysts say that suspending the tax would do fairly little to ease prices and could have long-term consequences.
There's actually a lot of benefits to having the gas tax that funds a lot of infrastructure, highway infrastructure that we want to build. If we repeal it now, are we going to put it back on later? I'm worried that we're likely not, and so we lose a very important source of infrastructure funding.
Trump can't suspend the gas tax on his own. That power is reserved for Congress. Lawmakers from both parties have introduced legislation, but it's not guaranteed a bill will pass, as a number of prominent Republicans remain opposed to the idea, notably over its potential to add to federal budget deficits. It's not even sure that Americans would reap all the benefits. Studies show that when gas taxes are cut, many retailers don't pass on the full reduction to consumers.
And Charlotte's going to wrap up looking at the markets for us.
Yeah, Asian markets mixed this Tuesday. The Kospi in South Korea falling from the record highs it reached on Monday, riding that AI chip boom. As you can see, down 2.29%. The Nikkei trading higher after a volatile session, with investors selling off at one point to reap the profits of their AI chip stocks. European shares, meanwhile, opening the Tuesday session lower as hopes of a quick resolution of the war in Iran continues to fade. The DAX in Frankfurt down 1.28%. Also, as April annual inflation there accelerated slightly to 2.9%.
Charles, thanks very much. Charles Pellegrin with business on